Welcome to Daily Finance News. Today, we are covering the latest market movements and economic news that may impact your investments. Starting with the stock market. The S&P 500 index is down 0.44%. The Dow Jones Industrials Index is down 0.15%. And the Nasdaq 100 index is down 0.56%. The regional bank stocks are leading the decline after PacWest Bancorp dropped over 8%. Amid ongoing concerns about the health of the U.S. banking system. Also, the market sentiment is down after China's April imports fell 7.9% YoY. Weaker than expectations, indicating that China's recovery is slower than expected, which weighs on global growth prospects. The markets are waiting for Wednesday's news on the U.S. April consumer prices. The consensus is for an April CPI report of 5.0% YoY. Unchanged from March, and for April core CPI to ease to 5.5% YoY from 5.6% YoY in March. Clarity regarding the U.S. debt ceiling is also a bearish factor for stocks. Treasury Secretary Yellen said Sunday that there are simply no good options for solving the debt limit stalemate other than Congress lifting the debt ceiling cap. Moving on to global bond yields, the 10-year T-note yield is down 0.6 BP at 3.501%. The 10-year German Bund yield is up 2.0 BP at 2.339%. And the UK 10-year gilt yield rose to a 2-1/2 week high of 3.851% and is up 6.7 BP at 3.848%. Now, let's take a look at today's stock movers. PayPal Holdings is down over 10% after reporting 433 million active customer accounts in Q1. Below the consensus of 437.6 million. And warning that its adjusted operating margin wouldn't grow as quickly as it had anticipated earlier. On the bullish side, DaVita is up more than 12% after reporting Q1 revenue above consensus and raising its full-year operating income estimate. In the overseas stock markets, the Euro Stoxx 50 is down 0.70%. China's Shanghai Composite closed down 1.10%, and Japan's Nikkei stock index closed up 1.01%. Moving on to the forex market, the dollar index is up by 0.28%. Euro USD is down by 0.45% and dropped to a 2-week low. A stronger dollar today is boosting the euro. USD JPY is up by 0.06%. The yen gave up overnight gains and is modestly lower, under pressure from higher T-note yields and dollar strength. Finally, in the precious metals market, June gold is up 0.07%. And July silver is down 0.13%. Precious metals prices are mixed as a stronger dollar and higher T-note yields today are bearish for precious. However, concerns about the health of the U.S. banking system and the U.S. debt limit impasse have boosted safe haven demand for precious metals. That's all for today's Daily Finance News. Stay tuned for tomorrow's market update. Thank you for watching, and happy investing. The financial markets have been experiencing some turbulence lately, and investors are closely monitoring the developments to make informed investment decisions. In this video, we'll discuss the latest updates and movements in the stock market, bond market, and currency markets. Starting with the stock market. The S&P 500 index and the Nasdaq 100 index were both down today by 0.44% and 0.56%, respectively. Meanwhile, the Dow Jones Industrial Index was down by 0.15%. This decline in the stock market is due to a variety of factors, including concerns about the health of regional banks in the U.S. and the weak Chinese April imports. The drop of more than 8% in PacWest Bancorp is leading regional bank stocks lower, and market sentiment declined after Chinese April imports plunged 7.9% YoY, which weighs on global growth prospects. Investors are closely monitoring the U.S. April consumer prices, which are set to be announced tomorrow, and the consensus is for an April CPI report of plus 5.0% YoY. Unchanged from March, and for April core CPI to ease to plus 5.5% YoY from plus 5.6% YoY in March. One bearish factor for stocks is the lack of clarity regarding the U.S. debt ceiling. Treasury Secretary Yellen said that there are simply no good options for solving the debt limit stalemate, other than Congress lifting the debt ceiling cap. She also said that the Treasury Department may run out of cash. to pay its bills as soon as June 1st unless the debt ceiling is raised. President Biden is scheduled to meet House Speaker McCarthy and other congressional leaders today to discuss the debt ceiling. On the bullish side, DaVita, McKesson, and Jacobs Solutions were up more than 4%, 7%, and 12%, respectively, after reporting better than expected Q1 results. Meanwhile, PayPal Holdings was down more than 10% after reporting fewer active customer accounts than expected and warning that its adjusted operating margin would not grow as quickly as it had anticipated earlier. Moving to the bond market, June 10-year T-notes were up by 2 ticks. And the 10-year T-note yield was down by 0.6 basis points at 3.501%. Weak stocks and concerns about the health of the U.S. banking system have boosted safe haven demand for T-notes. However, gains are limited by negative carryover from a jump in the 10-year UK gilt yield to a 2-1/2-week high. Also, supply pressures are undercutting T-notes, as the Treasury will auction $40 billion of 3-year T-notes later today as part of this week's May quarterly refunding, where the Treasury will auction $96 billion of T-notes and T-bonds. Finally, in the currency markets, the dollar index was up by 0.28%. The dollar is moderately higher, driven by concerns about the global economy after China's April exports fell much more than expected. The yen is under pressure from higher T-note yields and dollar strength, but initially moved higher on comments from BOJ Governor Ueda, who said he intends to scrap the yield curve control program once we have an inflation outlook indicating that sustainable and stable 2% inflation will be achieved. To sum up, investors are closely monitoring the movements in the stock, bond, and currency markets, with many factors at play, including concerns about the health of regional banks in the U.S., weak Chinese April imports, and the lack of clarity regarding the U.S. debt ceiling. Stay tuned for more updates in the coming days as we continue to monitor the developments in the financial markets.